Okay. So objective questions are also very important. Nowadays they ask you roughly 60-40 ratio. 60 are the one-liners objectives and 40% are the case studies. Okay. So focus on this completely. Download Adda 24/7 app on your mobile. In this app you will be getting the premium study material, current affairs, job alerts, daily quizzes, everything what you need for CAIIB, JAIIB and bank exams, you get it over here. Okay, including live lectures. Okay. Subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting all the updates for CAIIB, JAIIB and various banking exams. Also the free series on YouTube are going on this channel only. So subscribe it. It's a major tool for clearing the BFM and retail exams. Okay. These are the two case study batches which we have started. It's not actually a case study batch. It's a total revision batch. Okay. It's for 3 hours. Okay. 8 p.m. to 10 p.m. in the evening. Also we have the same batch in 7 a.m. to 8 a.m. 1 hour in the morning. So 3 hours totally. Okay. 7 a.m. to 8 a.m. in the morning and 8 p.m. to 10 p.m. in the evening. Both of these. Okay. Okay. So let's start. Maintaining a foreign currency account is helpful too. Means why does a foreign currency account needed for maintenance? Basically for this importer exporter. See here, what happens is conversion is a huge cost. Okay, transaction cost, and also the exchange rate. Once the dollar suppose if the rupee falls down, presently what is happening, rupee has fallen hugely. Okay, so exchange risk, that is also a problem. Transaction cost, that is also a problem. So what is the answer? Both transaction and exchange risk, C, or avoid exchange risk and domestic currency depreciation. So what should be the answer? Here I'll give you the hint. Answer is either C or D. Okay, so what is the answer? C or D? Correct. The answer is, everyone, answer is C. Okay, it's not D over here. Why? Because domestic currency depreciation means local currency depreciation. Okay, this generally is not the word used. Mainly the word used is exchange risk. Okay, so the main correct answer over here is to avoid the exchange risk and transaction cost. Got it? Arbitrage transaction is indicated by, basically what is arbitrage actually? Arbitrage means, here let's say I'm having a Reliance share. Okay, I'm not having actually. I'll give you an example. There are two markets in India, NSE and BSE. So what do? I'm a trader. What do? I buy this Reliance share at NSE. Now imagine there is a gap, and it's always there. You can check in the market anytime. There is always a gap between NSE and BSE rates for any share. Hardly it remains for 2 to 3 seconds, not more than 3 seconds. Okay, like Reliance. At NSE it might be at 2500 and at BSE it might be at 2503. This 3 rupees gap is there. It's hardly for 2 seconds, 3 seconds, not more than that. But my systems should be so strong that what will I do? I'll purchase 1 lakh shares of Reliance at NSE over here, and immediately within 1 second I'll sell it at BSE. So I've gained 3 rupees per share. 1 lakh shares mean 3 lakh rupees. What is the risk to me? No risk. Just buy it over here, sell it over here. Only the point is time frame. Time should be the important factor. So what is the answer for this? Arbitrage transaction is indicated by buy in one market and sell in another. Quick transaction, second risk free, and all of the above. So what is the answer now? A, B, C or D? Everyone? Yes? The answer is correct. Simple, isn't it? D. Only the point, the risk over here is time only. You should be very quick. Your system should be very quick. Otherwise, if you take more than 5 to 6 seconds in that transaction, your transaction is gone. Okay? The acronym for SWIFT stands for, SWIFT is what? Safety Width for Financial Transactions. Society for Worldwide International Financial Telecommunication. Society for Worldwide Interbank Financial Telecommunication. Society for Worldwide, what? SWIFT Worldwide Information for Financial Transaction. This is an easier one. Who can answer me? Who can answer fast? Here, A is out, D is out. It's only B or C. So Society for Worldwide International or Interbank. You will always get trapped in these two words. One is international, interbank, and second is this telecommunication word. they will give you transaction also. So you'll always get trapped in this. So whether the answer is B or C now? See here, the answer is not B. It's not telecommunication. Okay, I won't mark tick mark over here. The answer is sorry, it's not international. The correct answer is Society for Worldwide Interbank. This is important. This is only for bank. SWIFT is used only by the banking system. Okay. Next, indirect rate in foreign currency means indirect. What is the difference between direct and indirect? Okay, if I tell you this way, okay, $1 equals to 80 rupees. So what is this, direct or indirect rate? Who can give me the answer? $1 equals to 80 rupees. Is it direct or indirect? It is. Everyone type fast in the comment section. It's direct, right? When dollar is constant, remember this. See here, when the foreign currency, I would say, is constant and local currency is fluctuating, then it's a direct rate. What is indirect? Reverse way. Suppose if I say 1 rupee equals to something dollars, 1 upon 80, whatever the figure might be, okay, this much dollars, so then it is called as indirect rate. Okay, when is in which currencies is the indirect rate given? Indirect rate is given generally, it's not given for rupees. Okay, it's generally given for GBP, then AUD, Australian dollars, then New Zealand dollars, NZD. Okay, New Zealand dollars. Okay, these are the three main currencies where this indirect rate is given. There may be many. Okay, there are many actually. You can type into in the comment section. If you know anything else other than this, type it in the comment section for indirect rate. Okay, type fast. Yeah. So what is indirect rate now? The rate quoted with units of home currency kept fixed. See this. What is this? Indirect, which is kept fixed. Left side, what is the home for India? It is home currency, right? So rate quoted with at which home currency is kept constant, fixed. The rate quoted in which the units of foreign currency are kept constant or fixed. Okay. The rate quoted in terms of third currency, and none of the above. So what is the answer now? Very simple. Yes, the answer is isn't it A? Isn't it A? In which home currency is kept fixed, right? So 1 rupee is kept constant over here. Which is the rate system which India is following now? Are we following indirect or direct? Type fast in the comment section. Which is the rate system India is following now? Indirect or direct? Fast, 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 fast. Yes, India is following direct rate system. It's not following indirect rate. Okay. Next, Sri Lanka is facing continuous deficit in its balance of payments. You might have seen all the problems going on in Sri Lanka, right? In the foreign exchange market, Sri Lankan rupee is expected to. They also have the same currency rupee, okay, but they call it Sri Lankan rupee. So if it is facing a continuous deficit, if it is facing a problem, then this rupee will be what? Depreciate or appreciate or show no specific tendency or depreciate against currencies of countries with positive balance of payment and appreciate. Okay, so keep it very simple. All these big answers are of no use. The correct answer is either A or B. Give me the fast answer, A or B. Okay, it's either A or B, so it will definitely answer is A. Okay, see here, depreciation against currencies of countries with positive balance of payment, it has nothing to do with that. Okay, positive balance of payment. Japan, okay, Japan has always has a positive balance of payment, but then also the currency is lower. Okay, so it has nothing to do with this BOP. Got it? Clear? It will, see here, it's the growth which determines any country's in the long term. In the long term, growth means economic growth. That is the point which decides any country's foreign exchange means that currency rate. Okay, so it will depreciate over here. Correct? Okay. The effect of speculation on exchange rate is here. What is speculation basically? And just now we saw this Sri Lankan concept. This Sri Lankan, the current economy is facing a problem. So this is known as the fundamental reasons. Here, I'll give you 2 points over here. One is this fundamental reason. Fundamental, okay. And the next question which we are facing is this speculation. This is a technical reason. Always remember this, technical. There are 2 reasons for change in any currency rate. One is technical, second is fundamental. Technical always is for the short term, and fundamental is always for the long term, right? So now The effect of speculation on exchange rate is, so it causes violent fluctuations in the exchange rate. Second, it aggravates the market trends. And C, either or both A and B, and neither of A and B. Okay. So what is the answer? A, B, C. D is out. Okay. So the answer is either or both of A and B. Correct. C is the answer. Okay. Now you have got this answer. Give me the other technical reason for short term fluctuation. One is the speculation. Second is, what is the second? Second one is this interest rate difference. Always remember, it's not a part of this question, but interest rates. Okay. The interest rates in any country always determine the means fluctuations in that foreign, in the currency of that country. Okay. Okay. The demand for domestic currency in foreign exchange market is indicated by the following transactions in the balance of payment. So any foreign currency means demand for domestic currency. Okay. Suppose let's say rupees. So demand for rupee in foreign exchange market will be indicated by what? Export of goods and services, import of goods and services, export of goods and services and capital inflows, import of goods and services and capital outflows. So when will my rupee will be in demand? My rupee will be in demand when my economy will grow. Economy will grow means, see this, economy grow, right? When my economy will grow. Grow means what? What will happen in growth? In growth, what does it happen? I make more exports, right? So my exports will be higher, and my capital inflows means if my country is growing, then only my FDI and FII will come in, right? So that is known as capital inflows. Okay. Yeah. So the answer is what? A, B, C or D. Which one is the answer? Correct? Everyone is? Yeah. Answer is simple one, isn't it? C. Got it? A spot transaction in foreign exchange market involves the, now what is spot? Now this is the basic, isn't it? We have that what 4 terms. What are these? Spot. What is the second term? Who can write the other terms? Spot. Second is what? Anyone? Second is cash ready, right? Cash or ready we call it, right? Anything, same, one and the same, cash or ready. Next, what do we have? Tom, correct. And after Tom, what do we have? There is fourth one, 1, 2, 3 and fourth. Which is that fourth? That is simple one where we solve the problems, right? Yesterday I solved the problems on this. Forward, okay? Forward market means these are the 4 main terms used in foreign exchange market, okay? So let's see. Exchange of export and imports at a specified future date. Specified future date. Now see here, I'll give you a hint. All these 4 are over here. Let me see who can answer this now. At a specified future date. So it is what? Spot, cash, Tom or forward. What is this? At a specified future date. It is spot, cash, Tom or forward. Okay. It is what? I'll just call cash now. No ready. Okay. Spot, cash, Tom or forward at a specified future date. Correct. It is forward. So this is now the answer is forward over here. But I want for spot. Right. Move on. Exchange of settlements at a specified future date. Exchange of settlements at a specified. So that is again forward. Okay. Exchange of import and export at a specified future date. Okay, you can just call this. Yeah, this is a barter system basically, but it's not used. This A is rarely used nowadays. B is used every time. Okay, settlements. Okay, but specified future date means forward. But in future date forward also we don't exchange export and import over there. Okay, presently. See here, it can be said that it can happen, but when we don't have that currency, means we don't have dollar and rupees and anything. If we have barter system, then what we'll do, we'll exchange is export and import at that time. So presently we don't use this A system, although theoretically that is the answer, that can be the answer for forward. But B is the regular used answer. Why? Because we have currency in between. Okay, exchange of settlements at a specified future date. So that is basically forward. Okay. Immediate, within 2 days, exchange of exports and imports. So what is the answer? Immediate, within 2 days. Okay, exchange of exports and imports. Again barter. So I'll exchange this export with import. Okay, so do we do this in this? No. So that's why C is also out. Even in fact A can also you can take it out out only, because we don't presently in this present situation, means present market, does any company or country exchange the export and import? No, isn't it? We exchange only currency. So that's why A and C become out. What about D? Immediate within 2 days exchange of bank deposits, or you can call this here, we call it settlements over here. Okay, in India we call this settlement. This bank deposit words is used in US markets. Okay, so immediate within 2 days exchange of settlement. So what is the answer now for spot? Spot is over here D, correct? But what is this then? Remaining forward is done. What about Tom? So transaction to be happening means settlement to be happening on the next working day. What is spot is done? Spot is 2 days after. Tom is done. Cash ready means settlement to be happening on the same working day, right? Same. Got it? Forward exchange rates involve the immediate exchange of bank deposits. Means again you can use the word settlement over here, because these foreign books use the word bank deposits over here. So involve the immediate exchange of settlements, involve the exchange of settlement at some specified future date, involve the immediate exchange of export and imports. So firstly, again this C becomes a barter system. So C is out, right? We don't exchange export with import nowadays. Okay, in earlier 1200 years, 1000 years ago, we used to do this. Okay, next, involves exchange of settlement at some specified future date, and this is immediate exchange. So either it's immediate or future date. Forward means. Okay, so what is the answer now? A or B? Immediate or future date? The answer is simple, isn't it? B, correct? Because none of the above is out. C is out, so it's either A or B. So answer is correctly B, right? So it's not immediate, it's exchange at a future date. Only remember, settlements are exchanged. When the value of British pound changes from 1.5 to 1.25, the pound has dash and the dollar has dash. Now this is again relating to direct and indirect rate. Okay, so what is British pound given as? Means is it a indirect or direct rate? It's indirect. Okay, so how do we write GBP to dollar now? GBP, I'll write this like this, $2. This is how it is written. GBP to dollar. GBP in the numerator, in the denominator it's dollar. Okay, so now what is the first rate given? 1.5. So it is 1.55021. Okay, means 1.5 GBP and $1. This is my first rate. Now what is given? What is given? Pound changes from 1.5 to 1.25. So now what it has become? What? 1.5 has gone to 1.25. Okay, 1. See, 1 has not changed. So now what has happened? Numerator is reducing. So when numerator is reducing, what does it mean? Who is decreasing? GBP is decreasing or dollar is decreasing? Yes, here GBP is decreasing, so depreciating. So what is happening to the pound? It is depreciating. And the dollar has, what is happening to this dollar? Again, it should also depreciate or appreciate. Who can type fast in the comment section? What is happening to the dollar now? If pound is depreciating, dollar will what? Appreciate or depreciate? Everyone. Correct? Yes, depreciated and appreciated. So B is the answer. Okay, this is appreciated. Always remember, when one currency depreciates, the other currency immediately for which it is compared, it appreciates. Okay, now I'll give you a simple example. Dollar. Okay, $1 equals to, let's say, 80 rupees. Okay, now if tomorrow this rate from $1 equals to 80 goes to $1 equals to 90, 190, okay, rupees. So what has happened? Who has depreciated, rupee or dollar? Earlier $1 was 80, now $1 equals to 90. So who has depreciated now? Rupee has depreciated or dollar has depreciated? Correct. Rupee has depreciated, because to buy $1 earlier I required 80 rupees. Now to buy $1 I require 90 rupees. Right? It's like this sabji. Okay, I'll say 1 kg of potatoes. Okay, earlier costed 80 rupees. Now 1 kg of potatoes are costing me 90 rupees. So what has happened? Currency has depreciated, right? So the other part has depreciated. Got it? Got it, everyone? Simple one. Okay. Okay. So before leaving now, see these two batches, BFM and retail. BFM has already started. It's from 7 to 9. See here, I'll write it over here. 7 to 8 in the morning, 8 a.m. in the morning, okay? And 8 p.m. to 10 p.m. in the evening. So 3 hours batch you are having right now running, okay? So join this batch ASAP. Also, like this video, everyone. I'll wait over here now. Like this video, everyone. Share it and comment if you have liked it. Okay, press on the bell icon. Okay, I'll show you how to go for this batch, and remember, use this code Y432. Huge discounts are available. How to use this code? I'll show you that. Okay, let's go to Adda 24/7 live. See this. If I go to Adda 24/7, see this over here. I'm on Adda 24/7 now. On this site, if you go, see here, if you are having the app, it's the best. You will get 1% extra. Okay, click on JAIIB and CAIIB. Clicked, see here, you'll get the CAIIB November December English batch. Click over here. Then you'll see all the batches over here which were shown. Okay, CAIIB, BFM, retail. I'll show you about BFM. Okay, BFM. So in this BFM you can read the details once you click over here. All the details are given. See here, 8 p.m. to 10 p.m. is given. It's also there at a 7 a.m. to 8 a.m. That is also an extra hour added. Okay, so total you are having 3 hours over here. Okay. So 10 plus hours of interactive classes, mocks and ebooks available, recorded videos are available. English medium December 2022 exam, that is very important, isn't it? Because May 23, you know. I'll just show you the portion also. So 3599 is the fees. Click on view offers. Now look at how much the fees reduces. Put the code Y432. Click on apply. Look at this. 80% off you are getting, means 3599 reduces to 719.8. 80% off, my god. Okay, if you clear CAIIB, in how many months will you recover this? Hardly 1 month, isn't it? 1 month minimum increment is 1000, so you'll recover it immediately. Go for it right now. Okay, also now I'll just show you about this May 23 portion. All of you are just asking me what is there in May 23. Many of us don't know. Okay, some of us have already studied. Okay, so with this May 23 portion you will be having, see, you will be having mainly, I'll tell you, one second, I'll show you this. May 23, you will be having you will be having 4 compulsory subjects. Okay, right now you are having only 2. Then in May 23 portion, you will be having negative marking. Right now you are having no negative marking. Also the retail elective is not there in May 23. Okay, so that's why I'll tell you, immediately go for the exam right now only. Clear it now. Okay, and then enjoy, isn't it? Bye.